service design is a frame that we have been consistently using on some of the brands in service of how they can transform in the world that you've probably seen through the last couple of hours. Before that, like in a little bit of introduction, that I belong to SapientRazorfish. For those of you who are not familiar with the brand, earlier this year, Sapient Nitro and Razorfish came together as SapientRazorfish. We are part of the larger Publicis group. But the reason I was flashing this is that our last 2 decades have been in service of our clients and the brands that we work with, how we help them navigate through this disruption. And hopefully through this, I would, A, be able to tell you about a frame, and second, also to some of the war stories that we went through. So the 3 things I wanted to cover was the shift that we are noticing globally from a product-centric economy to a service-centric economy. Then look at service design as a frame to start navigating that world far more effectively than probably a lot of the brands are doing today. And finally, thinking about technology in context of that, how do you think about enterprise technology, enterprise organizations, skills in context of that? So these are the 3 facets I'd like to cover, and hopefully it should be interesting. I'm gonna start from the very basic. What is the definition of service? For any marketer in the room, you would know that product marketing is very different from service marketing. One is about tangible, the other one is about intangible, which is catering to a stated or an unstated need of the client. And brands today cannot just rely on the prowess of the product they are putting forward, but also the service wrapper they bring in. So Uber is not only a taxi hailing service, but every single thing that you do on Uber around predictable wait time, around how you can rate the drivers, you get rated, are all part of a very well-groomed service around that product. And no better example, since we are in Mumbai today, no better example where a service can actually become a brand in itself, which is what Dabbawalas did in the last 50 years or so, consistently sending 150,000 dabbas every day seamlessly. So you can actually create a brand out of a service. Service experience is, for a lot of you would question that, is it a fad and folly? Is that something that we have to do? We have to put a wrapper. But I think there is an empirical business value to that. Service experience at the end of the day can be monetized. And a very simple example would be, if you think about Starbucks look-ahead service, which gives you a predictability of ordering a coffee and not stand in queue, is actually generating revenue for them. That is tapping into a new revenue, which is office goers who don't like to wait in the queue, have a predictable service, otherwise they'll go to the next door shop, not considering the brand and the coffee that much. They have actually created a revenue, and that's exactly what you do by tiering a commodity to a product, to layer on service, and at the epitome, look at service experience holistically, and they can be charged. And your pricing model can be very different for each one of them. If you think about a model, service model is a holistic model, and let me walk you through these. At the core, you would have a product. Let's take an example of, we've talked about retail and telco. Let me take a left field example of insurance. At the core, you would have an insurance product, a term product, and so on and so forth. Everybody does that. Everybody would claim also the slickest service around that, or a brand logo or a slogan which says that you'll get the best service. That's table stake. On top of that, there is some expectations I would have as a consumer from that service. Whether claims are settled in time, can I change the riders on that policy, and so on and so forth. But the fun begins after that. Actually, the fun starts there also, because the expected service definition constantly changes. It's a changing bar. The other dichotomy here is some of the service experiences are category agnostic or industry agnostic. If I feel Uber works in a certain way, I actually start expecting the same thing from my grocery application or something else, that I should have the predictability when I should receive the grocery at home and all the good stuff. The fun begins in the last 2 circles, where you have to look at augmented service, which is how would you effectively use the channels available today, whether it's online, whether it's augmented reality, whether it's IoT, and so on and so forth, to actually weave those services in service of the customer. And finally, the potential experience, which is you're playing with the emotions. So you've done the physical, virtual, but that's where the emotional space lies, and that's where you see Amazon Go, that's where you see Ubers of the world happening over there, where they are doing category-first innovation to pretty much change the game. Now, this model is becoming intrinsic for marketers to also start thinking about their products. And for any naysayers, and I've met many of those, saying that, you know what, it applies to retail, it applies to telco, it applies to some other industry, but my industry doesn't work. It's interesting, in the last 5 years, every boardroom conversation I've been part of, it's pretty much changed. So this is an example from utilities and commodities. Utilities is electricity and water coming to your home, right? And how difficult could that be? Like, you distribute, you charge, there is a billing at the end of the day. That industry's got disrupted, at least in the Western world, for two reasons. One is regulation changes, because you have deregularized the distribution to home. The second is power to customer. So now, as a consumer, I can choose. The minute I can choose as a consumer, it's an industry that's got disrupted. So the expected service definition has gone to smart metering, which is like I can runtime see how I'm going to be billed. I can make choices around what energy usage pattern I would like to hook up to, and also smart homes. So that's all affiliation to the same thing. So the boardroom conversation in some of the utilities player is, how do I become the Uber of my industry, which probably 5 years back I wouldn't have heard. At the back of this, obviously, everybody knows this is what's happening. This is the hype chart of how the technology has changed. The best way to look at it is in slices of 5 years. And there is no predictability to this. So anything I'm going to say is static for today, because I'm going to talk about everything that exists out there. So marketers have another problem, which is your canvas in which you can draw solutions is constantly changing. So that's another problem that you have to dabble with. So what's static is pretty much like what you see today. So services, from a number perspective, if you look at the GDP growth of all major nations at this point of time, including India right here, there's a humongous growth. That portion of the GDP is attributed to services actually is looking at, and India is not an exception to that. And that's how services are getting consumed. Exceptions, probably a couple of countries like South Korea, where traditionally the consumer behaviors are very different. You would see this agnostic of geography. And as an output of that, you'll see a lot of these statements hanging out there. So Apple, for example, Tim Cook, at the end of 2016, stood up and said that he's going to attribute 20 billion worth of their revenue to services, which was actually a sliver or non-existent revenue stream just 5 years back. And this is where all the innovation that you see are happening around the ecosystem, the connected ecosystem, iTunes, and all the other services beyond the phone as a product. With that as the backdrop, every brand has got this responsibility to stand out of the crowd. That's a wicked problem. Wicked problem is actually characterized by the fact that there are contrarian views. So if you were to talk to a consultant or any person who's dabbling with this, chances are you're going to get contradictory ideas around how to go about it. There are multiple solutions out there. Also, it has got a uniqueness in the context of that client or a brand, on that category as well. All that makes this problem very hard to navigate. And you need to kind of dissect that into baby steps. That's where service design comes into play. Now, service design by itself is a rhetorical model. It's traditionally been available, but it's evolved quite fundamentally in the last 5 years. So if you were to define how the services in a bank retail branch would look like, you would still apply that. You would see what is the wait time you would have on the teller, how the queue should be managed, where the desk should be placed, where is the customer area for maximum benefit to the customer. But the minute you change the channel, it becomes a very different paradigm how you look at that. Let's unpeel this in the next few minutes. So service design is all about orchestration. Orchestration is when you actually have to build in and tie a lot of facets of the organization as well as customer together. So it has a backstage and a front stage. I think the picture tells pretty much evidently that how it should look like. If you have a restaurant, it is not just about the service you render in the restaurant. It is not just about the food you lay down on the plate and when it comes and so on and so forth. It is hugely predicated on your kitchen. The timing, what kind of dishes would fly in, what is the sequencing, your supply chain, and all of the good stuff. So in transformative, disruptive world, this is exactly the facet that plays into how you have to look at service design. And very often, the conversation actually gravitates, depending on who you're talking to. CMO in the organization might be very focused on the front stage, looking at the product offering, looking at the value. At the same time, when you talk to a CIO and a CTO of that organization, they might be far more focused on the backstage, so to say, and probably they're not talking to each other. So how do you orchestrate that? Just to again give you an example, grocery, highly commoditized, price sensitive, and that price index, when Nicholas was showing that it was 83 or something in position. It's a very, very price competitive market. You have to manage your supply chain very effectively because how much you can keep on the replenishable or the perishables, and all that is a very, very tough algorithm to manage. Now, for a client that we had in Canada, we actually launched a service called Click and Collect. That was first time in Canada 5 years back. So what you could do is, a lot of people don't like grocery. That's a dreaded task. So what you would do is fill up your cart, order that, and book a slot where you can just go and collect that on your way back from office. So you would actually block it every Monday, put your stuff, and so on and so forth, and collect that. Now, interestingly, what we started noticing was the carts started with just 1 or 2 items, and the people who were laying down things on the cart wanted to go further in the week and put things into that cart. The insight there was basically the customers wanted to block the slot first, but the cart was something they wanted to discuss and fill that over the journey of the week, discussing with their wives, kids, and so on and so forth. Now, interestingly, that's a very big challenge. The minute you make a live cart, you open the cart for a longer duration, as long as like probably four hours before the delivery, it's a backstage problem. Because how the pick would happen in the store, how you actually would do that, the more time you have, more you stay organized. So to actually increase that elasticity of the live cart to all the way to 4 hours before you could pick the bags physically, we had to do a huge amount of change in the backstage process where pickers were given tablet applications, how they would actually go about the store, pack that, and so on and so forth. So what's probably not apparent to the clients or the customers in this case is what goes on behind, and 2 of them have to go in tandem. Let's deconstruct the front stage a little bit. So service design is ubiquitous. It's present everywhere. It's just that we don't think as a consumer about it. And it can be in multiple facets. Few example here. If you look at that, that's Trunk Club. Trunk Club is not an online offering, but they use heavy technology behind that. What they do is, you as a subscriber can go to Trunk Club, subscribe to that, and say that, like, these are my preferences. What they do is, they deliver a box like this with items handpicked by stylist for you. And there is no compulsion on you that you have to wear those items, keep those items. You can return the box. You can return few of those items. You can do that. The unboxing experience of Trunk Box is well written about. You should read about that. It's like, there are handwritten notes and so on and so forth. But the interesting story is their return rates are less than 10%. And how they do that is essentially use data. Every time they are looking at your social profile, looking at the choices you make, they are using AI and machine learning to enrich their data store to make very, very perfect choices for you. Now, that's a service rendered with huge amount of technology, but looks offline for all practical purpose. Or let's say Rolls-Royce. Rolls-Royce departed from the idea of selling engines, which was getting commoditized. Instead, what they ventured into was to sell thrust. What that means is, I'll sell you, dear airlines, I'll sell you engine hours. And anything comes in between that. So any service, reliability, guarantee, service engineers is part of the gamut. And that's how they evolve their business. So service could look like that. Or if you look at the connected ecosystem, where essentially Ubers of the world and connected cars, they're pretty much contesting the business models of the category. Uber, in many countries, have grocery services because that's to utilize the idle time of drivers and the trunk spaces that are available. I deliver grocery from point A to point B. I can hook up with local grocery. So you're actually changing the business models through technology. And finally, how a very primitive category like banking, which has existed for 2 centuries, Move-In, for example, is a completely digital-led proposition. They didn't have any branches until now. So their stickiness with you is through their mobile app. And the mobile app is a personal financial advisor, which is actually monitoring your spends and advising you on a daily basis that what you should do. You had that extra cup of latte. You can cut down on this and put $10 just with the swipes to the savings. And it's constantly advising you based on your propensity and how you want to live, rather than getting a sticker shock at the end of the month when all your EMIs are hitting you. For a marketer, traditionally the role has been far more pivoted around the top of the funnel, which is awareness of the product, acquisition at best. But as they say, marketers' role has completely changed from acquisition or advertising to actually managing the PR, which, if you decrypt, is actually managing the customer perception through the life cycle, and which is like the joining experience, the transaction experience, the after-sales experience, and so on and so forth. And that's where, when the marketer plays effectively, you can actually enhance the lifetime value of the customer. It's not about the sell only anymore. The effective brands, what they have been able to do is decrypt this. It's a very simple diagram where me refers to the customer at the center, but the choices that you want to make, this is actually conditioned for insurance, the choices you want to make as an individual, that is that product for my well-being, is that for my family, is that for my security of my future, and also the customer journey that I traverse through information consumption to making a decision. And those intersections of latitude and longitude are actually your opportunities to render the right services. And any brand that, if you think effectively and apply the lens, you'll see that they do it magically. How to navigate that world is actually service blueprint and not customer journeys. I hate the word customer journeys. Customer journeys are pivoted on a fact that they are web-centric. But in today's world, we have to depart from thinking that online is equal to web. We have to think about a richer world where physical, virtual, and every other channel has a very strong interplay that we have to play with. Like, for example, somebody showed WeChat. WeChat in China is a channel in itself. It started with a chat window. It now actually harbors as a platform pretty much everything to do with shopping to restaurant delivery. So people actually create applications on WeChat. We are working with an insurance player where their customer service is run on WeChat. Now that's how you start thinking about channel when you go micro into demographics and so on and so forth. So service blueprint is a departure from thinking web alone and start looking at service touchpoints which you'll have with customers, how you enhance it with the channel availability. For example, if I were to render a service in the rural India, I'll have to start thinking about more physical contact. I'll have to think about feature phones. It's not going to be smartphone, as you saw the segmentations and so on and so forth. So a lot of the CPG brands we work with, which go very rural, the service blueprint will look entirely different from what you look for probably a retail brand only located in urban areas. And that's when you start putting also technology in context. Otherwise, technology is a fad if you're just talking about VR, AR, IoT, unless you put it in the context of how you're going to elevate the services and so on and so forth. When we have done that consistently for our clients, for brands that have done it successfully, it looks magical. So this is the service map or the service rendition from Lufthansa, which is called as hyperconnectivity. And if you think about it, through the service journey of pre-planning, at the airport, on board, going to the destination, and even post-trip, you'll constantly see services getting rendered. Because airlines, for example, the product is just the seat you're booking. But how you perceive that brand is actually the check-in experience you had Probably they had nothing to do with that. Also, your baggage came late, and you say, like, Jet always delivers their baggage late, and so on and so forth. So you have to increase your sphere of influence and start managing all those perceptions through better services. So Lufthansa would actually look at real-time baggage tracking as part of their brand proposition and the service, for example. Getting to the backstage, this is where the complexities lie, because what comes to the customer is very simple, but when you start looking at the backstage, it is an enterprise transformation. I know it's a busy slide, meant to be, but this is actually the service design of a bank. So you've got all the customer services listed down, and what is happening today is that we are not only writing business cases at the top, that why disruption, transformation, where you have to kind of invest your money, we are writing business cases at this level. So for example, this is a bank in UK where amidst all those service designs, like you'll see one for like, how do I open my retail banking account online faster? Because if it's faster, it's slicker, it's going to have less cost implication, and you can do it far more. You can have more customers go to online and all the good stuff. So there's a business case written to that. We reduce the banking, the opening of a retail account from 20 minutes to 4 minutes. This is, again, a complex diagram, but I think I'll probably dumb it down. This is actually what we have started calling as the ERP of customer experience layer. What ERP did to the world 20 years back or 30 years back in terms of automating your supply chain, your functions within the organization, this is what we are calling as ERP of the customer layer, which is where a lot of organizations have a difficulty navigating all channels. So what you see at the top is all your customer touch points. It's not just limited to your traditional channels as social, search, and all of the good stuff. You'll also see like B2B. In an insurance, agent is actually a channel. How the agent is enabled is actually a channel, and so on and so forth. What I would focus after that is those three blue texts. At the bottom, you'll see system of records, which is where you have rich data on customers, on your transactional data. You can actually infer a lot around that. Interestingly, some of our advanced clients are actually defining customer segments, like we saw in case of Lava and so on and so forth, not through usability study, but through transactional data, through machine learning. So we are actually coming up with customer segments that what makes sense, where the buying propensity is not looking at the top, but also looking at the transactional data, which has been there for the last 5 years, 10 years, depending on the brand. What happens after that is the system of insights, where you start making meaning of the data. I have data, but that's static, of no use to me. You start making meaning of data. That's where you start crunching cross-attribution model across channels, driving insights, who's buying online, is somebody doing a transaction in online, then departing for servicing in offline, all that comes there. But once you've done that, that's where your system of engagements play a role across programmatic media, across MarTech or your acquisition funnel to sales and service and transaction, how you choreograph that together. Now, the minute you break this down, that's where the brand isolation starts happening. That some of your muscles will be overdeveloped, and suddenly, when somebody calls the call center, the service suddenly drops. But for me, that's the same brand. And that happens because we've seen brands who have strengthened one channel, like an insurance player we're working with, they've strengthened their call center, so you actually call them and tell them that, I've had it with your policy, I'm gonna move out, can you just purge this policy? They'll say, what they call as next best offer, they'll start playing the rules to you that, you know what, you are a valued customer, I can see that, I can make sure your services are better, I will actually put this freebie on you, and so on and so forth. But just imagine that service is not rendered on online. I go and say that I want to quit the policy, no questions asked, I get away. That's where you start seeing the channel fragmentation. And finally, large part of our work goes actually transforming, in transformation or disruption, transforming the organization itself. Most organizations have been successful in doing business, whether it was some of the retailers we saw, like Macy's and so on and so forth, with very deep-rooted traditional models, how marketing functions, how e-business functions, how supply chain functions, and so on and so forth. In a customer-centric world where you don't You don't care about what your organizational model. I need to have the right service at the right moment, on my choice, on my terms, on my device of choice or channel of choice. Organization barriers are the biggest barrier that we have to solve to actually enable our clients and brands to actually tend to the asks that is caused by disruption. Because there are two things you're playing for, and you have to play for. If you're not, you're probably going to be in oblivion very soon. One is actually to disrupt through innovation, basically change the category game and so on and so forth. And there are other set of players, they're actually fighting for actually protecting their territory or their traditional business from actually disruptors, like a lot of the retailers from Amazon and so on and so forth. So there's a lot of work that goes on here. A lot of our transformation work is actually pivoted on looking at all facets of front stage and backstage to choreograph that together. But one of the things we do, which is very hard to do with a lot of the organizations that's dealing with high-paced change, is to get access to the boardroom. So we have a proposition called 36, which is essentially spending 36 hours, uninterrupted hours with boardroom disrupted to chart out their 36 months roadmap. So you actually spend those 36 hours. The output of that is a 3-year roadmap, how you have to navigate your category or your product through the transformative landscape and what changes you need to make. So a huge amount of paper document, just like any management consulting firm would put together. But one of the things we also do is put there a vision video, which is pivoted on the reality and the roadmap that we have charted out. This is from a category. I would like you to guess what that category is, which is trying to disrupt and come out of the traditional mold. But what I would like you to focus when you see this video is not so much on the technology, but perhaps the aspect of services that are getting rendered for customers.
Imagine a future where our actions improve our financial well-being. This is Alice. She's trying to increase her health score. She's doing really well. That's another 65 points she's added. She's now level with her friend Sarah. Sarah jumps ahead with an even better score. Typical Sarah. This is Alice's husband Tom. Unfortunately, his car has broken down. The car seamlessly sends this information to his bank's concierge service, which automatically arranges for his car to be repaired. They'll also be providing a courtesy car, which will be delivered in a few minutes, meaning Tom will get to his meeting in good time. It's turning into one of those days for Alice. Luckily, when she bought the phone, she got instant insurance cover. All the details of her important items have been logged into her bank's visual inventory. All it takes is a couple of clicks. Well, that was easy. Tom heads out to the courtesy car. He's offered 2 routes, one which is safe and efficient, and one which is quicker. He chooses the safer route. Meanwhile, it's time for Alice's appointment with Paul, her personal banking advisor. They discuss the couple's finances and their goal of buying a new home by improving their financial passport. He congratulates Alice. Her new health score has reduced her health and life premiums. Next, they look at transport. Alice has a good score, and Tom's score is better because he's chosen the safer route to work. This will also help reduce the premiums. Paul tells her that Tom has reached the point where his no-claims bonus can be gifted, offset against his premium account fees, or deposited to their savings. Finally, they take a look at the couple's community score. By performing tasks posted by the community, they've helped to make their area more desirable. This has improved their community score and reduced not only their, but other community members' personal premiums. Paul tells her their improved scores for health, transport and community has helped to give them a better financial passport. This is great news. A better financial passport will give them access to a range of preferential deals and get them closer to their goal of buying a bigger house. Alice and Tom see a perfect property with a good community score. They decide to get a more accurate picture. They connect via their financial passport, and because Alice and Tom's rating is so good, they're instantly offered a much more affordable mortgage deal with lower life cover and content premiums. So, all the hard work to improve their financial passport has paid off. Because not long after, their dream home becomes a reality. Welcome to 2016.
Throughout this, if you've noticed, the protagonist of the story was the customer. And brand had a role, just like Obi-Wan Kenobi, to enable the customer. And brands that are doing it successfully by rendering the right services are actually disrupting category. Where I would leave is pretty much few summary items that you might want to take away, that brands need to accelerate innovation in service experience to create value for customer. Unless you're doing that, and in order to stay differentiated, there are business monetization models available through that, but brands have to do that. And it should not just end up in the advertising voice of like saying that the brand is the best advisor or best product and so on and so forth. It has to actually live that promise, because customer have a choice to say that like I can go to something else. Service design lends a structure thinking around how to look at the frontscape and the backscape together. And finally, it's transforming digitally. The word that we use very often requires transformation of the whole enterprise. So it's not just limited to the customer scape, it's not limited to the technology. Sometimes it's actually retailoring the organization structure absolutely to look very different, and that's what we see through all the clients that we're working with. What I would leave you with is essentially we're looking at a restless India. So if some brands don't do it, somebody else would, because somebody else would pick up that idea and fill that vacuum very soon. So thank you, guys.